Africa is a continent brimming with immense potential. Vast natural resources, a youthful population, and emerging markets make it highly attractive to foreign investors. From oil and gas to minerals and arable land, Africa possesses the raw materials needed to fuel global growth. Its burgeoning consumer base and increasing urbanization present exciting opportunities for businesses worldwide. The continent's potential is undeniable, making it a focal point for international investment and growth. However, this potential must be harnessed responsibly and sustainably. Foreign investment should empower local communities, not exploit them. It is crucial to balance economic gains with social and environmental considerations for long-term success. The ultimate goal is sustainable development that benefits all Africans. Transparency, accountability, and fair practices are vital for realizing this shared vision. One of the most visible impacts of foreign investment in Africa is in infrastructure development. This transformation is not just about building structures, it's about laying the foundation for future growth and prosperity. Chinese investment, in particular, has been instrumental in building roads, bridges, railways, and ports across the continent. These projects are often part of larger strategic initiatives such as the Belt and Road Initiative, aimed at enhancing global trade routes. These projects are essential for connecting markets, facilitating trade, and unlocking Africa's economic potential. Improved transportation networks reduce the cost and time of moving goods, making African products more competitive on the global stage. Improved infrastructure is crucial for attracting further investment and fostering intra-African trade. By creating a more interconnected continent, these developments can help African countries trade more efficiently with each other, boosting regional economies. However, concerns remain about transparency and debt sustainability. The influx of foreign capital must be managed carefully to avoid long-term financial pitfalls. Some projects have been criticized for lacking competitive bidding processes. This lack of transparency can lead to inefficiencies and missed opportunities for local businesses. This raises questions about potential corruption and inflated costs. Ensuring that funds are used effectively and ethically is essential for the success and sustainability of these projects. Moreover, the large-scale borrowing associated with some infrastructure projects has raised concerns about debt burdens on African nations. It's crucial to balance the immediate benefits of infrastructure development with the long-term financial health of the countries involved. It is vital to ensure that these projects are financially viable and benefit local populations in the long term. Community involvement and transparent governance can help align these projects with the needs and aspirations of the people they are meant to serve.
Improved infrastructure is crucial for attracting further investment and fostering intra-African trade. By creating a more interconnected continent, these developments can help African countries trade more efficiently with each other, boosting regional economies. However, concerns remain about transparency and debt sustainability. The influx of foreign capital must be managed carefully to avoid long-term financial pitfalls. Some projects have been criticized for lacking competitive bidding processes. This lack of transparency can lead to inefficiencies and missed opportunities for local businesses. This raises questions about potential corruption and inflated costs. Ensuring that funds are used effectively and ethically is essential for the success and sustainability of these projects. Moreover, the large-scale borrowing associated with some infrastructure projects has raised concerns about debt burdens on African nations. It's crucial to balance the immediate benefits of infrastructure development with the long-term financial health of the countries involved. It is vital to ensure that these projects are financially viable and benefit local populations in the long term. Community involvement and transparent governance can help align these projects with the needs and aspirations of the people they are meant to serve.
Foreign investment can be a catalyst for economic growth and job creation in Africa. It has the potential to transform economies by injecting much-needed capital into various sectors. When companies invest in new factories, mines, or agricultural projects, they create employment opportunities. These investments can lead to the development of infrastructure, such as roads and power supplies, which further supports economic activities. This, in turn, boosts local economies and improves living standards. Increased employment means more disposable income for families, which can lead to better education and healthcare access. Moreover, foreign companies often bring new technologies and skills to Africa. These advancements can help local industries become more competitive on a global scale. This knowledge transfer can help build local capacity and foster industrialization. Training programs and skill development initiatives are essential for creating a skilled workforce that can sustain economic growth. However, the benefits of economic growth are not always evenly distributed. There are often significant disparities between urban and rural areas, and not all communities experience the same level of development.
In some cases, foreign companies have been criticized for exploiting cheap labor and offering poor working conditions. Workers may face long hours, low wages, and unsafe environments. There are also concerns about profit repatriation, where a significant portion of profits earned in Africa is sent back to the investor's home country. This can limit the amount of capital available for reinvestment in local economies. It is crucial to ensure that foreign investment translates into tangible benefits for local communities, including fair wages, decent working conditions, and local reinvestment. Policies and regulations should be in place to protect workers' rights and ensure that investments contribute to sustainable development.
It is crucial to ensure that foreign investment translates into tangible benefits for local communities, including fair wages, decent working conditions, and local reinvestment. By fostering a fair and equitable environment, we can ensure that the positive impacts of foreign investment are felt by all. Delving into the potential pitfalls of dependence on foreign capital, we must understand the complexities involved. We see that while foreign investment can be beneficial, it often comes with strings attached. Over-reliance on foreign capital can lead to debt traps, where countries find themselves in a cycle of borrowing and repayment. When countries borrow heavily to finance development projects, they may initially see rapid growth and infrastructure improvements. However, they risk accumulating unsustainable debt burdens that can cripple their economies in the long run.
This can lead to a vicious cycle of debt servicing where a significant portion of national revenue is used to pay off interest and principal. This leaves fewer resources for essential public services like healthcare, education, and social welfare programs. Moreover, excessive debt can erode a country's economic sovereignty, making it vulnerable to external pressures and policy dictates from creditors. This loss of autonomy can affect a nation's ability to make independent policy decisions that are in the best interest of its citizens.
It is crucial for African nations to adopt prudent debt management strategies to avoid these pitfalls. Prioritizing sustainable financing models is essential. This includes exploring alternative sources of funding that do not lead to excessive debt. Such alternatives include domestic resource mobilization, which involves generating revenue from within the country. Public-private partnerships can also be a viable option, allowing for shared investment and risk. Transparency and accountability in loan agreements are also essential to prevent corruption and ensure that borrowed funds are used effectively and efficiently. By involving local communities and stakeholders in the decision-making process, countries can ensure that development projects meet the actual needs of their population. Encouraging innovation and entrepreneurship can also help build a more resilient and self-sufficient economy. Investing in education and skill development is key to creating a workforce capable of driving sustainable growth. Ultimately, a balanced approach to foreign investment and debt management will enable African nations to navigate the risks and achieve long-term prosperity. Examining the exploitation of resources and the specter of neo-colonialism, we find that Africa is richly endowed with natural resources, but this wealth has often been a source of exploitation rather than prosperity.
The extraction of oil, minerals, and timber has frequently benefited foreign corporations and corrupt elites more than local communities. This has led to accusations of neo-colonialism, where former colonial powers continue to exert economic and political influence over African nations through their control over vital resources.
African nations are increasingly demanding a greater share of the profits from their resources. This includes renegotiating contracts with multinational corporations to ensure a fairer distribution of revenue. There is also a growing emphasis on local processing and value addition to create jobs and boost local economies. Highlighting African initiatives to ensure equitable partnerships, we see that African governments are taking steps to attract foreign investment while safeguarding their national interests.
Many countries have implemented investment codes and regulations to create a more transparent and predictable business environment. These policies aim to attract responsible investors while deterring those seeking to exploit loopholes or engage in corrupt practices.
Furthermore, there is a growing trend towards regional integration and cooperation in Africa. By pooling resources and coordinating policies, African nations can enhance their bargaining power and attract more favorable investment terms. The African Continental Free Trade Area, or AfCFTA, is a prime example of this effort to create a single market and promote intra-African trade. Showcasing how local communities are safeguarding their interests, we observe that across Africa, local communities are becoming more vocal in demanding a say in investment projects that affect their lands and livelihoods.
From farmers resisting land grabs to indigenous groups protecting their ancestral territories, communities are organizing to ensure that their voices are heard. This grassroots activism is essential for holding investors accountable and ensuring that development projects are socially and environmentally responsible.
Civil society organizations are playing a vital role in empowering communities and advocating for their rights. They provide legal support, raise awareness about investment contracts, and monitor the environmental and social impacts of projects. This bottom-up approach to investment governance is crucial for ensuring that development is inclusive and benefits those most in need.